Hey guys, it is Mark Coe for Thursday, October 26th. Want to remind everybody that on Saturday we're doing Toast to Traders. It's called Trade Thirsty. So I'd love to have you guys show up and get to listen to the hour presentations at noon Eastern on the East Coast. So it's Toast for Traders, Trade Thirsty. And if you need any information or the link, just contact support at Compass FX. I wanted to take a look today. I give a lot of talk here on levels, and I want to focus solely on what a lot of retail does, which they only look at one short-term chart. And so you'll know from watching my videos, I always do a top-down analysis. I always do longer-term time frames first and work down to shorter stuff. But that doesn't change that methodology on how it works, even if you're only going to look at one time frame. What I would suggest to anybody that's along this path is that I think you're going to be better served with more information, but that doesn't change the fact that you can still deal these levels in short term. So I want to use dollar yen as an example, and I want to look at trade today, and I want to take it just with a 15-minute chart and walk through and just kind of look at this. So this is the end of Wednesday trading, so this is 5 o'clock on Wednesday. So here's what I would have to mark my charts, my dollar yen charts. I would have a top at 114 and a quarter. I would have a bottom at 113 and a quarter. So it creates a 100-point zone. Within that, the majority of trade is occurring at 114 and at 113.45. It's all occurring within that. So those are going to be the edges that I will look at. Look for long trade. And so here's how I would diagnose that. I would take this as the zone and say, okay, that is what I would like the market to be able to hold from a support standpoint. This is not as crucial, right, this 1354, but you see this 1348 stops right in front of this former top edge. So this is a breakout where buyers claim control of this little edge. And that's all that's going on. So let's think about that with that in mind. So the places I would want to buy would be against 1348 or against 13 and a quarter. Right? And so I'd have to pick stops accordingly. If I'm targeting a move up to 114 and at 47 is what I'm paying for it, well, I have to think about it's 53 ticks topside. What am I willing to risk to make 53 ticks? So the idea becomes I need superior risk versus what I'm superior reward versus what I'm going to risk in the trade. So here's your first opportunity. 9:15, so early Asian trading on Thursday night. Or I guess it's Wednesday night going into Thursday. So there's a long opportunity right there at 1347. Now, again, here's where you have to, as the trader, decide what am I willing to risk. Am I going to hit a bid in front of this level, this 13 and a quarter, which is just what the market could do. They couldn't take it any lower than 13 and a quarter. So am I going to hit a stop anything tighter than that? If so, what am I going to do? Am I going to risk 12 ticks? Well, if I'm going to risk 12 ticks, I'm going to be out on almost the low, but I won't actually get taken out if I'm risking 12. If I start risking 10s or 9s or 8s, I'm going to be taken out of this trade because the low is 37 overnight. I'm sorry, 34 overnight. So at some point, I'm going to get taken out of this trade. So the idea is that if you're going to be really tight, there's just not much of a way to survive this deal. But what you have to look at is what is going on within the trade. So it puts in a low, and here's how I mark my levels. Once a new low or a new high is established, I will come across and mark that and say, okay, here's now my frame of reference. So any tap back into this area then becomes pretty significant because it's still within the long zone. So here's an opportunity here. Like I said, tight stops, I don't see any way of surviving that. I think you're going to be down 10 ticks. The idea of being able to buy it back within that is now resulting in a fairly good risk reward because, again, you're targeting 114s. So look at yourself as going to be down 10 ticks. Maybe it's 12, but look at yourself as entering bottom edge or waiting for the tap back into this, which gives you a little higher purchase, right? But either way, you should be long this trade. So one opportunity, a loser. Two opportunities, nail it at the bottom. This results in ultimately that move, which is about 55 ticks. So that 55 tick move more than pays for your 12 tick stop. You know, you're still up 43 ticks. So what's the idea at this edge, right? We're not trading with the bias. We're just looking at edges. Well, the idea at this edge should be the same idea, which is to sell that edge, right? So getting short at 114 that results in a pretty good move. That's a 30 tick move to the downside before we're testing it again later in the day. So the idea that you can still look at these levels with the same approach, which is while above them, I'm going to use them as support. While below them, I'm going to use them as resistance. And you're going to be a much more active trader, right? You're going to be a much more active trader. I think you're going to be better served by understanding the bigger levels. Those are the ones you want to deal on, but it's going to give you the activity, and you're still going to maintain. Look, even if you're risking 10 or 12 at this point, by the time you buy down at this stage, you don't have to risk another 10. That's still only a 20-point risk for what became a 60-point reward. It's still 3 to 1, 3 rewards for 1 risk. It's still good. By the time you get this rotation, there's a lot of traders that will take that every day. 30 ticks off the top. They'll dig it. At this point, you're up 60, up 30, down 10, down 12. You'll take those results. So understand that when we look at these levels, I think you come from a stronger position to understand what the bigger money's doing, but that doesn't mean you can't be active within it, especially if you will use those in a biased format and give yourself a little more information. So the whole purpose today was to show you, with or without a longer term bias, still how the levels work, right? Level, 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 breaks the level, taps back to the level, trades to this level, breaks it, hovers around it, ticks back higher, trades to this level. It's still level to levels trading, no matter how you cut it. So anyway, for 26th of October, Mark Coe, I hope you guys join us for Toast to Traders on Saturday morning. As I said, I'm speaking at 12 Eastern, so go ahead and sign up. And if you have any questions about signing up, you can always send an email to support@compassfx.com, and they can help you with that link. But I hope everybody's having a great day, and cheers. We'll talk to you soon.